It is 100% certain that fiat will continue to debase because of the debt spiral that we are in globally, not just individual countries. This is a global fiat phenomenon. There are potential problems with the Blackrock ETF, but if you hodl your own keys and you own the hardest asset ever introduced to mankind called Bitcoin, the math is on your side. Because if you measure Bitcoin in a debasing fiat currency, it's going higher because the unit of account is going lower.
Greg Foss, the executive director of strategic initiatives at Validus Power Corp and a passionate Bitcoin supporter, firmly believes that fiat currencies are akin to a Ponzi scheme teetering on the brink of collapse. He contends that Bitcoin and gold are the only reliable assets that can safeguard one's wealth in the face of an impending economic crisis. The critical distinction lies in Bitcoin's fixed supply of 21 million coins, in stark contrast to governments' propensity to recklessly print money, leading to the continuous devaluation of fiat currencies. Foss envisions a future where paper money will be worth no more than the paper it's printed on. In a recent conversation with Clarke, the host of the Gday Bitcoin YouTube channel, Foss delved into the concept of currency debasement and invoked the wisdom of Voltaire, the 18th-century French writer and philosopher. Voltaire had warned that paper money inevitably returns to its intrinsic value, which is zero. Foss maintains that this notion remains relevant today, as paper currencies, bound by mathematical principles, steadily lose value, while Bitcoin's worth continues to rise, especially as fiat currencies decline. Despite recent market fluctuations, Bitcoin has maintained a bullish trajectory in countries like Argentina, Venezuela, and Turkey, where local fiat currencies rapidly depreciate against the US dollar. Foss anticipates that when the United States experiences a similar fate, Bitcoin's value will surge against the dollar almost instantaneously. Furthermore, Foss dismisses concerns about Blackrock's ETF approval negatively affecting Bitcoin, asserting that as long as individuals hold their own Bitcoin, they should remain optimistic about its future, much like his positive outlook on the potential approval of a spot ETF.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
I'm very bullish, and I don't believe the FUD actually reflective of the true risk. That being said, I'm never 100% certain about anything, except I'm going to get to my punchline in the first 2 minutes of our podcast. The only thing I'm 100% certain of is fiat debasement. Everything that I do in life is about mathematics and probabilities, expected value. You said billions of dollars of bonds. That's a flattering intro, but here's the truth. A good day, I would trade $1 billion. Okay, like on one day, I would do that. Not that I traded billions of dollars of treasuries. That's easy to trade $1 billion of treasuries. But trading $1 billion of some esoteric credit instruments, that's more difficult. And you got to be right in the meat and potatoes of the financial markets to do that. I didn't do it on a regular basis, but I could certainly think about 4 or 5 days in my career that I traded over $1 billion of esoteric credit instruments. You need to understand, people, there is no certainty in financial markets, except, again, mathematics will prove that fiat debasement is 100% certain. And you can't argue with math, okay? Math is the base layer of language, because if you measure Bitcoin in a debasing fiat currency, it's going higher because the unit of account is going lower. I don't know how to say it any more simply, you knuckleheads. You're not making money on your house, okay? Absolutely not making money on the value of your house. The value of a roof over your head has never changed, one iota. What has changed is the unit of account that measures the value of that account, that house, okay? Understand math, mathematics, not FUD, not, oh my God, BlackRock's going to attack the hardest asset. Why would BlackRock attack the hardest asset? To destroy any value that accretes for itself? Think about the probabilities. Yes, it's not a zero probability, but it is not an attack vector that is planned. I need people to play probability analysis. Understand that it's a distribution of outcomes where you have tail risks on both ends. But my God, you're supposed to play the most likely outcomes, not these tail risks. You can hedge against the tail risks, but don't go to the newspaper and say, I'm 100% certain about this tail risk that has, I don't know, less than 2% cumulative probability. You guys don't effing get it, okay? You just don't know how to manage risk. So that's my little pitch. Learn math, understand statistics. If you don't get grade 11 math, you probably missed the most important subject in school. So if you failed grade 11 math, have fun being a slave to the fiat Ponzi.
Rather than dwelling on the negatives, Foss chooses to maintain a positive outlook, particularly in light of the world's largest asset manager, boasting over $9 trillion in assets under management, expressing not only an interest in Bitcoin but also considering offering a product that would facilitate direct investments in this asset for its substantial clients. While some may worry about the potential for Blackrock to manipulate Bitcoin prices, similar to the actions of major U.S. banks in the gold and commodity markets, Foss dismisses these concerns as unnecessary. He believes that Blackrock stands to benefit when Bitcoin prices rise. In the interview, Foss also addresses the brewing crisis within the U.S. banking industry following the widespread contagion in the banking sector in March. Policymakers, including Treasury Secretary Janet Yellen, have attempted to reassure the public about the sector's strength and resilience. However, recent events, such as the $1.1 billion deal between the Bank of California and PacWest Bancorp, indicate that the industry is far from robust. Foss explains that this is merely one example of struggling companies merging with one another, ultimately leading to a rapid unraveling of the entire system. Here are additional excerpts from the interview.
In 1988, when I graduated from school in an upstate New York Ivy League school called Cornell, there were 15,000 banks in the United States. 15,000. Okay? Now, contrast that with the attic of the United States, which is my country, Canada. We're a long, thin ribbon. We only have 6 banks. They span the globe, they span the country coast to coast. But due to different regulations in the two countries, like interstate banking rules and community banks and whatnot in the USA, there were 15,000 in the USA versus only 6 in Canada. Damn, that's a pretty big structural difference, right, between the two countries. Which is to say, though, Sean, today in the United States, there's about 5,000. Which is to say, in the last 35 years since I graduated in 1988, 10,000 banks in the USA have either failed or had to be combined with stronger balance sheet banks to work out bad loan portfolios. That's 10,000 banks in the USA that have disappeared in 35 years. What do you think the trend is? I'm anticipating that the US will settle out with a banking system somewhere, dare I say, below 500, but above 100 USA banks, which means they're going to get a lot bigger. There's going to be a lot more concentration of risk in the US banking system. And most importantly, there will be an implied, and this is where it's key, too big to fail. The banking systems in both of our country are already too big to fail. Any one of the 8 national banks in Canada are too big to fail. The government has an implied backstop on any one of them because the contagion to the remaining 7 banks would be so severe that it would cause the rest of the banks to fail if the government didn't backstop the banking system. How do they backstop it, Sean? With the ability to print money. So banks, which are levered 25 times to their equity capital base, that's the leverage of a common bank, which is to say their risk-absorbing capital is 4 cents on every dollar that they lend. That means they lever their risk-absorbing capital or equity 25 turns. That's how you create money, is through the banking system. So the banking system is the fiat Ponzi transfer mechanism, which is to say banks in the United States will continue to consolidate or fail or get what's called a take under. And in USA, in the last 2 months, there was a amalgamation of 2 California banks, PacWest and Bank of California, where Bank of California took over, in air quotes, took over PacWest at a price that was under the trading value on the open market of PacWest stock. See, they had to do that, and PacWest had to accept the take under, not take over, take under, to combine 2 weak balance sheets into something that was more robust by eliminating duplicity in the system of banks. Get rid of all the back office of one bank, you can increase the profitability margin, etc. But now you have 2 zombie banks merged into one that eventually will be acquired by another bank because it still won't survive.
Greg Foss is foreseeing the impending collapse of the global banking sector, extending beyond the United States to impact countries worldwide. He estimates that this collapse will mark the eventual downfall of the fiat Ponzi scheme and herald a new era where Bitcoin takes center stage. Foss anticipates that, prior to this transformative shift, more banking collapses will occur in the United States as smaller banks continue to consolidate into the larger, so-called too-big-to-fail institutions. According to the former hedge fund manager, this consolidation, coupled with the introduction of central bank digital currencies, has been part of a deliberate plan all along. What are your thoughts on Greg Foss's interview and his outlook for Bitcoin and the broader US economy? Feel free to share your comments and observations in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.